to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to discuss the KBW Restoration Index, which is a proprietary tool designed to quantify the pace of U.S. economic recovery in real time, is Fred Cannon, Global Head of Research at KBW, a stateful company. Fred, it's great to have you with us. Welcome to Trade Talks.
Great. Well, thank you for having me on today, Jill.
And Fred, thank you. And why did KBW decide to create such an index, and how is it constructed?
Well, what we were trying to do is say, this situation obviously is unique going through the pandemic, and issues were coming at us so fast in terms of how quickly the economy was shutting down, what was happening in the stocks, what was happening in the marketplace. We decided that we had to move beyond the traditional economic measures of GDP and employment, both because they're lagged and because they're not really reflecting what's happening in the immediacy of the market. So what we tried to do was say, hey, there's a whole bunch of kind of new indicators of economic activity. Let's try and build those out, and then let's use those to see where we are relative to pre-pandemic levels across a broad array of indicators. And that's really what we did. We tried to say, okay, here's where the economy was before the pandemic, here's where it's been through it, and using numbers that we can update weekly rather than waiting for GDP numbers. So that's really the background for it.
How does the KBW Restoration Index compare with other traditional economic indicators?
Well, the primary thing is real time. So what we're doing is we're using things like open table seating. We're using what's going on in airport traffic. We're look at gas demand. The Dallas Fed has a great index on mobility, which is critical. And then we're also looking at some of the weekly employment numbers. So that's really what we're trying to pull together in terms of this index.
Where does the index stand now, and what is it telling us about where we are in terms of economic recovery?
Well, Jill, so where it stands now is we're about 20% below the economic activity pre-pandemic. What happened was when we look at these indicators, summary, right during the depths of the lockdown back in March and April, we got down as low as 50% of the overall economic activity. So we've climbed back about 60%. Now, what the interesting thing is about this is that across these different indicators, they vary tremendously. For example, in terms of open table reservations, we're only at about seatings, that is we're about 55% of activity. Jobless claims, we're way off where we would have been pre-pandemic. However, on some things like mortgage applications, we're actually above pre-pandemic levels. So really, it looks across, but I think it gives us a very good sense of where we are today overall, and it feels about right. So we got down as low as 50, we're back to 80, we're making progress at about 1% a week, which suggests that we would get back to where we were at the pre-pandemic level of economic activity sometime next spring around April or May, and at the current pace.
So KBW focuses exclusively on the financial services sector. So how does the Restoration Index tie into the performance of financial stocks?
Well, that's exactly great question, Jill, and thanks for asking, because this was really designed for financial stocks. And if you look at what's happened with financial stocks this year, they've actually tracked this index pretty closely. Huge fall off, some recovery in financial stocks, but nothing like what we've seen in the overall market. And I think that is because financial stocks really reflect a broad swath of what's happening, not in the economy, not single kind of areas. So for example, we know that a lot of the tech stocks are back above where they were pre-pandemic. And part of that is because the marketplace is saying, hey, because of the pandemic, people are moving to online faster. And so those kind of stocks are doing really well. Financials, if you think about banks and insurance companies, they're really dependent on what's happening overall in the economy, across the economy, not in one kind of sector activity. And so as a reflective, we believe this is really a pretty good indicator of where we are in terms of financial stocks. And somewhat sadly, how much further we have to go before we get a full recovery in this sector.
So if we look at the October 8th report, the KBW Restoration Index increased 1.8% this week, moving it above 80% of the pre-pandemic economic levels for the first time. What was that driven by?
Interestingly, Jill, it was mostly driven by our mobility index indicators. Airport traffic was up 3.5% in the week. This Dallas Fed mobility and engagement was up 5%. Gas demand, which is kind of a movement issue, was up significantly. So interestingly, because we're kind of hearing about various lockdowns, but in fact, we are making progress on mobility, which eventually will drive overall activity. We also saw mortgage applications continuing to climb. On the other side of this, employment numbers have leveled off and are stabilizing. And that is somewhat disconcerting for how long it's going to take the economy. And obviously, this gets back to the point of how important further fiscal stimulus can be for this indicator and for the economy overall.
Fred, thank you so much for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.